All right, hey guys, it's Sam. Hey, well, good morning to you. Quite an interesting morning that we're having here. As I will often remind you, our purpose here as technicians is really not to try and interpret why the market is moving. Certainly, there's been a lot of commentary about this, and just a perusal through Twitter will give you some good ideas as to what's happening here. So we have both commentary from bankers, and we have governments taking action. Interestingly, these are the two central entities of which are most threatened by cryptocurrency and Bitcoin and the blockchain. That's a discussion for another video. Let's just look at what's happening in Bitcoin technically. So for any of you that have been watching what I've been trying to show you and teach you, there should be absolutely no surprise at what you're looking at. Where do we go? We go right to the 50, and it's front run by a few dollars, which is very typical algo behavior. So we've got the reaction here. So now we have to look at this and evaluate whether or not that's a hard low. And we don't know, and we won't know until more time has passed. But we can look at this and start to deduce some probability that we at least have a good temporary low. As to whether or not there's one more push down, that remains to be seen. But this should be no surprise to any of you. And you know, the 50 being there, this little cluster here. You know, this is all it just totally like trading 101. But I understand that when the market is coming down that hard, and if you've been stopped out like I was, and if you took some of my trades over the last couple of days, hey, stops happen. Right, that's just the reality of trading. You're going to need to get used to that. Your expectation almost always should be that you are going to be wrong more than you're right. And that's just the reality of it, which is why I continue to preach to you, ultimately success is determined by your money management, your discipline with regards to exiting the market and letting your stops take you out, but then continually positioning yourself for the risk-reward scenarios where you can benefit 4 to 5, 6, 7, 8, 9, 10 to 1 when you're right to offset all the small losers. That's just how trading works. That's the business. So let's look here specifically at Bitcoin. So I've got a 2-hour chart. This is on Bitstamp. Again, you guys are all trading on different exchanges. But this is a good reference for us. So we can see that we come, we're a few dollars from the 50. Now, we've got to evaluate here and see, where are we likely to head for? If we're going to bounce here, where are we like to go? Well, obviously, we're going to hit some resistance here. That's just a wall of resistance, right? It provided that support. It breaks now. Previous support becomes the resistance. So we can start drawing some fibs and see what we're likely to face as we start to move higher. So just keeping it as simple as I possibly can. The first draw, here we sit. Now we got through the 618 up here. Right, and again, you'll start to recognize that when that's happening, that's often indicative of a B wave. It's a battle to get to new highs. They can't get it there, which is why you will often see markets put in this kind of action, which is why it's often a B wave, where they're pushing to get up to new highs. They can't get there, so it will often fail between the 618 and the 786. Right, so that's a variable that we have to be aware of, right? So if we were trading this at the 50 with a stop on the 618, well, if your stop was at the 65, maybe you snuck through without getting stopped out, but that's just the reality of trading. It's not perfect, right? So you could have easily been stopped out there. If it started to come back down with this action, that might have given you some sense of confidence on the short side, seeing that kind of bar. Now, what happens next? Let's just open this up. So if you were a bull, as we were going into this, let me just draw this up. So here would be the logical pull. right? We come down, we're through the 618 on this first bar. So that certainly was a bad sign. 786, there it is. Again, they're trying to defend. It doesn't happen. But right now, we're just looking at where we're likely to find resistance. So clearly, we're going to expect some here. But take note, and I think I mentioned it, I showed this to you in a video over the last couple of days. Look at where the negative 618 lines up with the 50. It's almost to the dollar. It's a perfect overlap. So that's that idea of building a case for a pivot. How strong a case can we make for this being a solid low? Well, there's some awfully strong evidence right there. We know that it's unusual for a market to go beyond the negative 618 off of a prior retracement, and we're a few ticks before the 50. So that's why I was posting that trade this morning. That's you are trying to catch the falling knife there, so it's not a trade to take with a lot of size, but it's definitely a good first entry because you can be very tight with your stop. The market's going to prove you wrong very quickly. So very low risk, very high potential reward. So not a bad place to be long, and if you took that as I've suggested, this is a good time to tighten up your stop because we're now operating on the premise that that's a solid low, at least for the time being. So if we continue to work our pulls, let's just keep it going just by the book. So there's our next pull. Now, we come up to the 50, we wick a couple of times, we go to the 23, there's some congestion there, some profit taking. We're through the 618. We're not quite to the negative ones, but this is an extreme. So we have the possibility that on an extreme move, there's one more leg down here. We're going to get to the negative 1. Negative 100%. It's possible. But now, this is where having some insight into typical Elliott wave behavior can add some benefit to us. As I said, it's not essential, but it is helpful. So we know in an ABC, the most common relationship is C equaling 100% of A projected from B. Well, in this case, we get through the 100. We go to the second most common distance, which is 127.2, right? Another fib number, and that also happens to overlap exactly, within a dollar or two of the 50. Again, building a case, building the evidence that that we've got a solid low in there. So that off there, sorry. So we've got now 3 fibs lining up there giving us a confluence zone. And the most dominant, of course, being the 50. Right? And you can see this reaction that we get. We know there's algo buying there. We know that. So if we look at this and we say, okay, well, let's go to our oscillators and see if that can give us any help. Now I'm going to start with the Elliott oscillator, because that's very easy to interpret. So if we're now moving down impulsively, we know that the strongest wave is going to give us the largest distance here in the histogram. Remember, this is just a 5 and a 34 moving average displayed as a histogram. Well, so here is our very strong wave. So we have the possibility that we have within this C wave a 5-wave impulsive structure that's forming. And we can clearly see, it's again, with Elliott, when it's just jumping out at you, that's where it can be useful. So we've got a very reasonable scenario that we've got a 1, 2. We've hit our 3. Now we're going to come up for some sort of a 4, and potentially we come back down either double bottom or we're going to go all the way to the 1.618. Right? This is another fib cluster. So this is a very real possibility. This would be the 618 of the entire move, the 1.618 of the A to B relationship, and you've got this little cluster here. We've also got that's the 65, right, which happens to be lining up exactly with the wave 1 high. So we know there's likely to be support there. So we have another cluster here, which is a potential zone that this could move to. So we can't say with any certainty that that low is in and solid, and that's the end of this. There's a very real possibility that we're going to put in a 5-wave structure because this is equally as valid a support zone as the 50 is, right? Just we don't know yet. So if we start to look at some fib relationships, well, we know that the most common relationship here is going to be between the 2 and the 4, the 2 retracements. So if we pull from the 2, down to the 3, look what we see here. I'm going to take the 786 off just to declutter the chart a little bit. The reason, again, back to building a case. So the reason I think we've got a solid low here, possibly not the definitive low, but a good low to work from, is because of this relationship that we start to see coming back the other direction. Look where the 618 lines up in relation to the length of the impulse from 2 to 3. So coming back up, the 618 lines up perfectly with this shelf of resistance that we're gonna head into. We know if we're gonna go higher, we got to break through this. That's going to be the battle there. That's our line in the sand, and the battleground between bulls and bears. I can guarantee you're going to see a reaction there. So that gives me confidence that we have a good low here because of this clustering relationship in the fibs and the structure. So it would not surprise me at all to see this push up, and now we're likely to see resistance right up here. And to stay consistent, I'll switch that. So, I am not often on the short side of Bitcoin, and I'm not suggesting that's a trade to take, but it's certainly potentially a trade to take. As we come back up to the 50, we know there's going to be resistance there, so that's potentially a short side. I don't like to short Bitcoin, but that's certainly a trade setting up. We'll have to see when we get there what the oscillators look like and if there's any help there from timing. But this would be a very typical progression for this to take. And then we can put a channel on this and expect to see. I've got that extending all the way. Expect to see this area here be a strong resistance zone. So just rudimentary analysis tells us that we've got a potential roadmap here from which to work. So again, as I said earlier, if you're long off of the pop down here at the 50, let's tighten up the stops because we know that we're likely to hit some resistance here as we come up. So there, that's from 34.50 to 39.20, up to 4,000. That's a beautiful trade. There's nothing wrong with that trade. That's at least a 2.5, 3 to 1 based on moving the stop. Now your risk should be almost non-existent. You really could be to break even here. So you've got nothing but this nice upside here. This would be a reasonable spot to take profit, or if you wanted to see if we can get through it, that's a good spot to take some partial profit and leave a little bit on to see if we can break through and start heading towards new highs. All right, so that should give you some reference to work from throughout the remainder of the week. We'll watch it and update it as it progresses. Okay, guys, more to come.